All right, let's dive into India's 2026 Union Budget. Now, forget all the complicated jargon for a second. At its heart, this is the economic game plan for 1.4 billion people. We're going to break down what it actually means for the country, for its industries, and, yeah, most importantly, for you.
You know, every single year, this budget literally shapes the economic future of the most populous nation on Earth. And this year, the big theme is Viksit Bharat, which means developed India. That's a huge clue, right? It signals a really interesting shift from just building physical stuff like roads to empowering the people who use them. So let's start right there with what it means for your wallet.
Look, whenever a new budget drops, the first question everybody asks is, okay, but what's in it for me? And this year, it looks like the answer is all about giving some relief to the middle class, especially with the rising cost of living. And that starts with the one thing we all care about, taxes.
Okay, so this slide gets right to the point. We're all feeling the pinch of inflation, right? Well, for anyone with a salary, the standard deduction is a really big deal for tax relief. The big hope, the big expectation, is a serious hike this year. If that happens, it could literally put thousands of rupees right back into your pocket. Plus, it would make the whole new, simplified tax system way more attractive.
But it's not just about the standard deductions. There's this, well, you could call it a viral rumor floating around, and it's a potential game changer. Optional joint taxation for married couples. This idea is borrowed from tax systems in places like the US and Europe. And if it happens, wow, it could totally change how Indian households do their taxes.
So here's the gist of how it works. Right now, if you have a single-income family earning, say, 20 lakh rupees, they get hit with a pretty high tax rate. But under this new proposal, they could combine their income and use the tax-free slabs of both partners. That would mean huge savings. It would be a massive relief, especially for families with just one person earning. Of course, making a change this big would be a heck of an administrative challenge to pull off.
So, all these potential tax breaks and reliefs, they bring up a pretty big question, don't they? Where is all this money going to come from? To get that answer, we need to zoom out from our personal finances and take a look at the government's much bigger economic strategy.
Just look at that number for a second. 12.5 lakh crore. That is a staggering amount of money. This represents the government's massive investment in the country's future. We're talking about capital expenditure, or capex. This is the money that's funding everything: new roads, railways, green energy projects, digital networks, all the things that are meant to be the real engine of economic growth.
This chart really shows the balancing act the government has to pull off. The best way to think about it is like your own household budget, right? You've got your running costs, things like salaries, subsidies, and paying the interest on old loans. And then you have your investments. That's the big capital expenditure we just talked about. The whole game is to manage those running costs really well so you can free up more and more money for those long-term growth-driving investments.
You know, you can really see a story unfolding when you look at how the budget's focus has changed over the last few years. It kicked off with pure crisis management right after the pandemic, the vaccine and health budget. Then it shifted gears into a massive infrastructure boom, the nation-building phase. And now, for 2026, the strategy is all about consolidation and empowerment. It's about making sure people have the money and the means to actually participate in this growing economy.
Now, a huge part of that economic empowerment is about creating jobs right here at home. And that brings us to the Make in India initiative. It's a major focus, and this budget is trying to tackle a stubborn old problem that's been holding it back for years.
Okay, this term inverted duty structure might sound super technical, but trust me, it's a critical piece of the puzzle. For years, India has had this weird, backwards situation where it was actually cheaper to import a finished smartphone than it was to import the parts and build it here. I mean, that's crazy, right? It basically choked the growth of local manufacturing jobs before they could even start.
So the 2026 budget proposes a really clever two-step fix for this. First, you slash the import duties on all the raw materials and components you need. And second, you keep or even increase the taxes on fully imported finished goods. Just like that, you flip the whole equation. Suddenly, it's not just possible, but it's actually more profitable to manufacture locally, and that's how you fuel the domestic industry.
Of course, no country is an island. In today's world, which feels more uncertain than ever, a national budget isn't just a plan for spending money. It also has to be a defensive shield. So let's look at how this budget plans to protect India from all the economic storms brewing around the globe.
I mean, think about it. Geopolitical tensions are messing with supply chains, energy prices are all over the place. So the big question is, how does the budget shield the Indian economy and you and me from all that chaos? The answer, it turns out, is a multi-layered resilience plan.
So here's the government's strategy to basically insulate the economy from outside shocks. It starts with just being really strict with the finances to keep the currency stable. Then, it includes direct support for small businesses, a fund to help them absorb sudden price shocks from tariffs. And finally, it doubles down on boosting domestic production in critical new areas, so we're just less dependent on imports in the first place.
Now this number, the 4.4% fiscal deficit target, it might just seem like a figure on a spreadsheet, but it's so much more than that. By keeping its borrowing under control, the government sends a powerful signal to global markets that India is a stable and safe place to invest. And that acts like an anchor for the rupee, which in turn helps prevent those sudden painful spikes in the price of things like petrol.
So when you look at the big picture, the 2026 budget really marks a clear pivot. We're moving from a phase of building roads to a new phase of building economic resilience. The whole strategy is to create a kind of shield, one that protects households, empowers industries, and secures India's place in a pretty volatile world. So the big question we're all left with is, in the face of all these global uncertainties, will it be enough?